Hey, hope you're having a great day so far. Today is January 22nd, Friday, and on this post, I'll be telling you about the overall crypto markets, which includes Bitcoin dominance and Bitcoin price action, before diving into Matic Network and Nano, Matic and NANOUSD, and see what exactly are going on in these two markets. Since the last time I've spoken, I'll be telling you about the bullish and bearish case scenarios for today, as well as the short-term price prediction on these markets according to what I'm seeing on the charts. Before I begin today, if you guys are watching me on YouTube, do subscribe. If you guys are watching me on TradingView, do follow me as I'll be keeping you updated on the latest crypto setups on my watch list, regardless if it's a good day or a bad day. If you guys do want to support me and don't already have a Webull brokerage account, you guys can use my referral link down below. They're still giving away 4 free stocks as of today upon a successful sign up and a qualifying deposit, and I will also receive a referral bonus if you guys sign up under me. Please also read my full disclaimer below. I am not a financial advisor, and this is not financial advice. I'm purely sharing my own speculation opinions on this market. I cannot tell you the future, and you should always do your own due diligence before trading or investing in this market, as it's extremely risky and volatile. If you guys have any questions or comments, please do only leave them in the comment section below, but I will try my best to get to as many of them as possible. Now, see what exactly is going on in the market first. Bitcoin dominance is what I always take a look first because it tells me where the money could be trending into, whether it be Bitcoin or altcoins. Currently, as of yesterday, I did mention that on the 3-day time frame is what I was focusing on because I was looking for the price action to break through the 200 MA right here, which is the orange line on the 3-day time frame. Currently, it does look like it's getting supported by, let's see, what is actually getting supported by. No moving averages in particular, at least on my chart here, but it has went down to as far down as about 64.6% before getting some support, and now it does look like it's retesting this moving average that has actually just broken down from. In my opinion, I think that is normal to actually do a retest after price action has actually broken through support or resistance. So this is something I'm still looking out for. Of course, if the price action actually closes back on top of this 200 MA right here, that would not look as good for the altcoins because, like I said, if Bitcoin dominance is trending downwards, I would expect better trading opportunities for altcoins as opposed to if Bitcoin dominance was trending upwards. And if Bitcoin dominance is trending upwards while Bitcoin price action dumps, that could take the altcoins a lot more significantly down with it. Let's take a look into Bitcoin price action here and see what exactly has gone on since yesterday. Since yesterday, I did mention that when I was doing my post yesterday, there was still a very bearish candle right here. I did predict that it was going to be a falling wedge pattern. It does look like my prediction is staying intact right now. It did not get as far down as the 50 MA. My guess is a lot of buyers were actually seeing this level as a buying opportunity, and they have even placed buy orders ahead of the support. So in my opinion, I think that is a good sign. We still have about 2 more hours left on this day's candle close. So let's see where it actually ends up. Okay, the price level I am actually looking at would be the daily 21 MA. Let's see if this would be a bearish retest where the price action gets to the daily 21 MA, which is the blue line right here, and then get rejected again, and then we're going to get more bearish action, or would the price action be bullish enough to actually break out of this falling wedge pattern? If on this swing, the price action actually breaks out of this falling wedge pattern, let's say by tomorrow, then I will have a measured target still over 47K as far as I can read it here. Okay, so that is hypothetically if the price action is bullish enough to actually break out of this falling wedge pattern by the swing, then the measured target will be about 47K. Theoretical target only may be different in actual live price action. I would strategize accordingly if I was actually in this position. Now, so like I said, the daily 21 MA is going to be the key resistance right here, and that's pretty parallel with this upward trend line right here. So if it actually does close on top of the daily 21 MA, I would think that is the breakout of this falling wedge pattern. So I'm looking for a daily candle close to be safe, okay? But if I was trading this and I want to take more risk, then I might want to see possibly a scenario where the daily candle actually just breaches this upward trend line, and of course this daily 21 MA, even without a close. Just depending on how much risk I want to take. Okay, for safety, I'll be looking for a daily candle close above this above this upward trend line, and if I want to take more risk, then as soon as I see a candle breaching this upward trend line right here, then I might want to consider getting into the position. Those are some of the scenarios I would consider with risk management, of course. Let's take a look into also the scenario of if this price action actually gets rejected at the daily 21 MA right here. If it actually does get rejected, then I would expect the altcoins to actually react to it again, of course, on the bearish side. So that's what I will also take into consideration when I'm trading or holding any altcoins in this scenario. Let's take a look into Matic network and see what exactly has gone on in here since last time we have spoken, which has been a while. Since last time, I did mention that there was a inverse head and shoulders pattern right here. Price action has actually broke out of this inverse head and shoulders pattern. The measured target of that breakout was about 2.9 cents. Price action has continued upwards after meeting that measured target. Went as far as up 4.3 cents before getting a pretty hard rejection, all the way back down to about 2.2 cents. Now, it looks like it has actually formed an ascending triangle pattern. Ascending triangle patterns are generally bullish patterns. 63% chance of it breaking upwards. Let's see if this price action is actually going to be enough to actually break out of this bullish pattern. If it actually does break out on any date, because we have a flat top trend line, then I'll be looking at a measured target of over 5 cents as far as I can read it. Now, there are some bearish signals on the higher time frame here, including possible bearish divergence that could still be playing out, even though we do have a rebound candle right here, but it does not look too bullish to me as it's not engulfing, and the volume is very low. Okay, so let's see what could actually happen here, but this is the time frame I'm actually focusing on because there was bearish divergence on the 3-day time frame. On the weekly time frame, we're fine, and so is on the monthly. So the daily time frame was where there was actually a bearish divergence. I would consider this bearish divergence on the daily time frame to have played out, because every time I do see bearish divergence on a specific time frame, my conservative estimate is that it's going to fall back into the next closest moving average. In this case, would be the 21 MA right here. It has actually rebounded off that moving average. Let's see if this is going to be enough for it to at least take the price action up to the upward trend line right here, which is about 3.8 cents, before attempting to actually break out of this pattern. Now, on the 3-day time frame is what I'm still focusing on, like I said, because we did have bearish divergence on this time frame. And then, like I said, if I do see bearish divergence on a specific time frame, my conservative estimate is that it's going to fall back to the next closest moving average, which is the 3-day 21 MA right here, the blue line. Currently pretty far below, actually, still at about 2.3 cents. So let's see if the price action is going to be bullish enough to actually negate that significant drop. Now let's take a look into the bullish and bearish case scenario here. The bullish case scenario here, if the price action stays intact within this ascending triangle pattern and actually break out going towards its measured target. Like I said, it doesn't really matter if the day actually breaks out, as long as this ascending triangle pattern stays intact. Then the top trend line here and the bottom trend line, I don't have to make an adjustment to the measured target. Then, like I said, the measured target is going to be above 5 cents as far as I can read it, which may or may not be reached. It could also be overreached. Now, the bearish case scenario here, if price action If price action actually breaks this bottom trend line, the next level of key support I'll be looking at would be the daily 50 MA right here. And of course, the 3-day 21 MA. In this case, I still don't think I would have to invalidate the characteristics of an ascending triangle pattern. It does seem like I would just have to widen out the bottom trend line to adjust for to be parallel with wherever the second swing down actually lands. But we do have the 50 MA right here. That looks like it's going to be parallel to the bottom trend line. And if that's not going to hold, then I'm looking at the 3-day 21 MA, which also looks to be parallel with this bottom trend line. So it does not look like I have to adjust this ascending triangle pattern, at least the characteristics of one, but just maybe the bottom trend line. So those are the bearish case scenarios for Matic for today. Let me take a look into Nano real quick. Nano here has had quite a bit of a run since about even just the beginning of this month. Went from about 90 cents here all the way up to $5.50. Wow. And then now it actually looks like it's forming somewhat of a symmetrical triangle pattern. But like I said, after a pump like that, I would be a little careful. Let's take a look into the weekly RSI here, where it's way overbought. It went all the way up to about 87, 88. Pulls back a little bit, but it's still in very overbought territory. The 3-day looks like it has actually pulled back quite a bit, but there was also bearish divergence on the 3-day time frame right here as well. I don't think there was bearish divergence on the weekly time frame, so I'm good here. So this is something I'm watching out for, because even though it does look like a symmetrical triangle pattern right here, my conservative estimate, like I have been talking over and over again, it could fall back to the 3-day 21 MA right here. I don't think that's unreasonable because it's not too far down, right? I mean, it's going to take quite a bit of a, it's gonna drop quite a bit, but I don't think it's too unreasonable. In that case, then I will still keep an open mind and actually account for a possible falling wedge pattern right here. If it actually does just drop all the way down there, then it could actually turn into a more dangerous situation, at least for the time the price action is within the falling wedge pattern. So this is what I'm looking out for, even though it looks like a symmetrical triangle pattern right here. Okay. If the symmetrical triangle pattern actually stays intact, then I would have a measure target of about $6.10 upwards of that. Okay. Theoretical target only may actually be different in live price action. So that's what I'm looking at. If the symmetrical triangle pattern stays intact, 60% chance of it actually breaking upwards, but I would consider some of the bearish signals, like I just mentioned, specifically the bearish case, the bearish divergence on the 3-day time frame. So that's what I'm looking out for, and let's take into the consideration of the bullish and bearish case scenarios. The bullish case scenario here, if the price action is bullish enough, it would break out of the symmetrical triangle pattern and go towards its measured target. Some resistances along the way, including the fib level right here at about $4.50. Yep, that would be the next fib level, about $4.50 right there in that zone. That would be the key resistance I'll be looking at. And that is the bullish case scenario. If it's bullish enough, it will break out of the symmetrical triangle pattern, go towards its measured theoretical target. Bearish case scenario. If price action is not bullish enough here and actually breaks down from this symmetrical triangle pattern, the next level of support I'll be looking at, let's see, would it be actually the daily 50 right here? That would be about $1.90. 3-day 21 is about $1.83. So it's pretty similar levels, the daily 50 and the 3-day 21 MA right now. Those are going to be the next key supports I'll be looking for if the price action actually breaks the bottom trend line of the symmetrical triangle pattern. And now these are my bullish and bearish case scenarios for today for these markets. Let me know if you found it helpful. Give me a thumbs up if you did. Let me know agreements, disagreements, feedback. I would love to hear them. Hope you manage your risk carefully, and if you would like to see any more of my most recently uploaded videos on YouTube, you guys can check out my links up here on YouTube. See you next time.